Welcome to another one of our Money Talks video casts. I'm Jerry Salusa with your host. Kind of trying to update you. It is April 1st, 2011. This is not an April Fool's joke. No joke about it. The markets have reversed back up. They were in a downtrend starting on February 18th, bottoming out around March 16th. And the markets were correcting down with the oil that still remains over $100 a barrel, and the problems in the Middle East and North African countries such as Libya, Syria, Bahrain. We still obviously are in Iraq. So there's problems all over in these oil producing nations, which is producing some fear of potential disruption in the oil markets. We've also had, since our last video cast, all the problems with Japan. Major earthquake, tsunami, knocking out nuclear power plants. Those knockout of the nuclear power plants has created an increased demand for oil, natural gas, and coal to replace that lost power in Japan. Now, currently they're not running full speed, but that will create a higher demand at some near point in time, which will increase, demand for oil and higher prices potentially. But the market's aware of all those things. The market knows that oil's very high. The market knows that there's been problems in Japan and the big knockout of stuff. There's knows that there's problems with, obviously, Greece got the bailout. They've been downgraded double B minus. Portugal triple B minus, below investment grade, is going to need a bailout. Their government is basically resigned until they get through this bailout process. So these problems are known, yet the market has stopped going down and basically started to reverse back up again. The small cap index and the Dow have now had new recovery highs. Transportation, new recovery highs in light of high oil prices. So the Fed has done a great job pumping money and liquidity into the system. There's trillions of dollars of cash in the system, and it's finding a home. And basically what we're finding is, to draw a bad analogy, we're the tallest short person in the room is the United States, because things are screwed up in Japan, Europe, Asia. And so emerging markets look pretty attractive because they don't have the debt issues, and the U.S. markets look attractive for investors. Now, with that said, markets generally run in three legs. So we had the first leg up from August 31st to before Thanksgiving. We had a pullback. And then after Thanksgiving until February with the second leg up, we pulled back. Now we're on the third leg up. So, generally you have three legs up. So we're on that third leg. How high will we go? Will we go all the way back to 2007 highs? It's possible. Probably not likely. Probably 100 points from the bottom. I think it was just under 1,200, 1,160. So, we could probably get, maybe up to 1,400 or something like that from the new breakout right here. We are now invested long in the market. We are looking at things that pay dividends. We are looking for emerging market exposure. We still own our gold and silver positions. Natural gas looks very attractive in light of what's happened in Japan. So, we have gotten from a hedged position to a long position. We're almost fully invested at this point in time. It's very important to make sure that you're in the right asset classes. Mergers and acquisitions look like they're going to continue. That's really been driving the small cap market. A lot of those companies, with all this cash out there, buying these small cap companies, the bigger companies are. So there's a tremendous amount of opportunity for that. So we're in a mergers and acquisition fund as well. It's very, very prudent to be long right now, but to keep an eye on the exit, as this has been artificially driven by the new era of Fed stimulus. The Fed is just pumping money and pumping money with this quantitative easing too. At some point in time, the market will start discounting the end of that, because we're seeing inflation with high gas prices, high product prices. The president of Walmart, the CEO of Walmart, came out this past week and said, be alert, we're going to see higher prices. Obviously, high food prices, we already see that. So these things are going to cause the Fed to rethink their policy going forward. At some point, they'll start raising rates, reducing liquidity, bringing it back in, and that will cause the markets to stumble. For now, we're long. Keep an eye on the exits. If you want to take advantage of our free, no-obligation portfolio review, call our office toll-free 800-449-9501. Sign up for our free email newsletter. It's free. All we need is your email address. And again, if you have any questions, 800-449-9501. We'll update this thing at the next turn of our video cast if we see something in the market that's really important. Give us a call. Take advantage of your free, no obligation review, and good luck on your investments.